Procedures under customs, page number 144, that's it, 29, procedures under customs. So we are now going to discuss first import procedure. Import procedure we are discussing from the viewpoint of import by vessel. So first, there are total 3 parties in this transaction, that is exporter, total not 3 parties, 5 parties, shipping company, exporter, then person in charge of the vessel, that is captain of the ship, customs officer and importer. So between these people only the import procedure will be rotating first. So person in charge will come into picture only when the goods are handed over by the exporter to the shipping company. So exporter will hand over the goods to the shipping company for export to India. Where exporter is located outside India, he will hand over the goods to the shipping company for export to India. Now the shipping company will give a document of title to the goods known as bill of lading. To whom? To the exporter. So that exporter will send a bill of lading to the importer. Okay. Now the goods are handed over to the shipping to the person in charge of the conveyance, and the person in charge of the conveyance will bring the vessel to India. Before the vessel entering into India, they need to file an import manifest with the customs officer. And after filing that import manifest with the customs officer, that import manifest contains the details of the goods which are brought into India. Then the customs officer will grant entry inwards. Okay, you can enter into India. So that is known as grant of entry inwards. So then the goods will be unloaded and handed over to a custodian, port trust authorities. Custodian is an officer of the port trust authorities. They will hand over the goods to the custodian. Now goods are with port trust authorities. Parallelly, what importer should do? Importer should file a bill of entry and pay the appropriate customs duties. Then the customs officer will pass out of customs charge order. So now importer is having out of customs charge order, which means he paid the customs duty. Plus, he need to prove that he is the owner of the goods. So he need to submit the bill of lading with the person in charge, and he will get a delivery order. Okay, he will get a delivery order. He will submit the bill of lading with the person in charge of the conveyance, for which he will be getting a delivery order. So the delivery order plus out of customs charge order he need to submit with the port trust authorities. Now the custodian will release the imported goods. So this is the procedure. These are the 12 points involved. Now if it is by airways, wherever bill of lading comes into picture, that will be replaced with airway bill. That's it. If it is by vehicle, it will be called as railway receipt or lorry receipt. Then next, there is no concept of grant of entry inwards for the purpose of entering into India. In case of aircraft and vehicle, they can come, but grant of entry inwards is only for unloading. In case of vessel, grant of entry inwards is to enter, whereas in case of aircraft and vehicle, grant of entry inwards is only to do unloading. Because where can you park the flight, okay, if you are not giving grant of entry inwards? So that is this. So remaining points are same. Okay. Now import manifest. The person in charge in case of aircraft will be pilot, and import manifest will be replaced with arrival manifest. And in case of vehicle, the person in charge will be driver or conductor and or guard, and that person will be filing import report. In case of vessel, it is import manifest. In case of aircraft, it is arrival manifest. In case of vehicle, it will be import report. Okay. So that is this. Then see this. Imports by vessel, aircraft, vehicle. What is the document to be filed? Import manifest, arrival manifest, import report. Okay. Now we are going to see the compliances to be followed by the person in charge. Who is person in charge? In case of vessel, it's master, and in case of aircraft, pilot, in case of vehicle, driver or any other person in charge. What is the place of arrival? So as per section 29, the goods should, that is the vessel or the aircraft, should come to only customs port or airport. Not all ports and airports are treated as customs port, so only to the prescribed port or airport they need to come. Okay. And in case of vessel, port. In case of aircraft, airport, customs airport. In case of vehicle, land customs station. And as and when they enter, they need to file a import manifest, arrival manifest or import report. Import manifest and arrival manifest should be filed before arrival. So before they come, they enter, they need to file. Whereas import report, they can file even after arrival within 12 hours. Okay. And if there is any belated filing, so there is a penalty up to 50,000 rupees. So for belated filing, penalty up to 50,000. Then in case of vessel and aircraft, it will be online filing only, that is import manifest and arrival manifest. In case of vehicle, import report will be manual, but principal commissioner or commissioner may allow filing of import manifest, arrival manifest manual in the absence of necessary infrastructure. Okay. Then point number 4. So they should also submit passenger name record information as to who are all the people who are coming in that vessel or aircraft. So that details also they need to submit along with import manifest, arrival manifest or import report. See, these are the compliances to be followed by person in charge. So this is useful for MCQs or comment based questions. Okay. Then in case of import by vessel, so goods should be unloaded only after grant of entry inwards. And where the goods will be given, the goods are handed over to the control of a custodian. That's the reason why when the goods are lost, pilferage, so that custodian is liable to pay the duty. Okay. Then only goods specified in arrival manifest, import manifest or import report to be unloaded, and other goods should not be unloaded. And goods should be unloaded only at the approved place, no other place. Only at the approved place goods should be unloaded, and it should be unloaded under the supervision of proper officer. Suppose if the goods are to be unloaded and needs to be transported from the shore, that is shipped to the shore, sometimes the ship will be anchored somewhere at an outer anchorage because the big ship cannot enter into the port. Then from the ship to the port, they will be transporting goods through small boats. So that boats should carry boat note, otherwise these goods are found to be smuggled goods. Okay. So for unloading, if small boats are required, then he shall obtain a boat note from customs officer. Suppose if the unloading is on holidays or after office hours, they need to pay, that importer need to pay, that person in charge or the importer need to pay merchant overtime charges. Okay. So these are the various compliances to be followed by the person in charge in case of import of goods. Same way, what are the compliances to be followed by the importer? First, they need to file a bill of entry electronically through ICE gate. ICE gate is the customs common portal. And there are 3 types of bill of entries that we know already. Bill of entry for home consumption, bill of entry for warehousing or inbound bill of entry, or export bill of entry for home consumption. And the importer shall present the bill of entry by when? So what is the time limit for submission of bill of entry? So prior bill of entry or later bill of entry. Prior bill of entry they can submit within 30 days prior, and later, that is after arrival. See, before arrival of the vessel or aircraft or vehicle, they can submit within 30 days prior. And after arrival, they can submit within 1 working day. If there is any delay in filing bill of entry, it attracts a late fee of rupees 5,000 per day, rupees 5,000 per day if the delay is up to 3 days. If the delay is beyond 3 days, 10,000 rupees per day, but subject to maximum duty payable. So late fee cannot exceed the duty payable. Okay. subject to maximum duty payable. For example, if there is a delay of 8 days, first 3 days, so 3 into 5, 15,000. Next 5 days, 5 into 10,000, that is 50,000. So total 65,000 rupees is the late fee. But the duty payable itself is say 40,000, then 40,000 will be the late fee. Okay. So this late fee is payable for delay in filing what? Bill of entry. So what is the time limit for filing bill of entry? Date of arrival. Before date of arrival, if you are filing bill of entry within 30 days prior. So later means within 1 day, within 1 working day after the date of arrival it should be filed. Otherwise beyond that, if you file, there is a delay and it gets attracted, late fee gets attracted. So it's a late fee 1,000 rupees, 5,000 rupees per day if the delay is for up to 3 days, then 10,000 rupees per day if the delay is beyond 3 days. This is subject to maximum customs duty payable. Okay, clear here? Next, pay customs duty after filing bill of entry for home consumption, and customs officer will pass an out of customs charge order. If the goods are not cleared for home consumption or for warehousing within 30 days after unloading, so the goods are unloaded within 1 working day from the date of arrival, you should have filed bill of entry. You did not file bill of entry. So from the date it is unloaded, for a period of 30 days, they will wait. So either bill of entry for home consumption or bill of entry for warehousing should be filed. Otherwise, so that goods will be disposed of or will be kept in warehouse by the customs officer. Okay. So such goods may be disposed of by the custodian, or officer may deposit such goods in the warehouse. For how many days the goods can be deposited in warehouse? For 30 days. And beyond 30 days, for a further period of 30 days, the commissioner should approve. So for every 30 days, they should decide whether to keep it or for next 30 days or to dispose it off. Okay. So this is about the import procedures. First we have seen the import procedure, and then what is the compliance to be followed by person in charge, then what is the compliance to be followed by the importer. So this will be highly useful for MCQs and some small theory questions. Okay. Any doubt up to this? Any doubt up to this part? So can we proceed to the export procedures then? Say this. Page number 147, export procedures. Export procedures. Export procedures to be followed by person in charge, customs officer and exporter. First, exporter will hand over the goods with the customs officer. When exporter hand over the goods with the customs officer will verify, that is along with the shipping bill. So what is a document to be filed by the exporter here? In case of vessel and aircraft, it is shipping bill. In case of vehicle, it is bill of export. In case of aircraft and vessel, it is shipping bill. In case of vehicle, it is bill of export. So they need to file that with the customs officer. So once that exporter files the document with the customs officer will verify the goods and will pass a let export order. Then that shipping bill or bill of export along with the goods should be handed over to the person in charge. Person in charge should have obtained grant of entry outwards, and then the goods can be loaded into the vessel. Thereafter, the person in charge will be submitting an export manifest with the customs officer. Understood? In case of aircraft, that export manifest is known as departure manifest, and in case of vehicle, it is known as export report. Understood? So export manifest, export report and departure manifest, that is the name of the document. So generally export procedures are not that important. So just what are the procedure like points to be followed. What are the compliances to be followed by person in charge? loading of goods only at the approved place. Only at the approved place the goods should be loaded. There, unloading only at the approved place. Here, loading only at the approved place. There, loading, unloading only under the supervision of proper officer. Here, loading only under the supervision of proper officer. And there, unloading with the help of small boats, boat not required. Here, loading with the help of small boats, boat not required, because shipping bill is sufficient. Shipping bill is sufficient, boat note is not required. And if the loading takes place on holidays, then merchant overtime charges is payable. And the person in charge shall obtain grant of entry outwards before loading, because if the goods are loaded, and thereafter if the grant of entry outwards is not obtained, first goods will be loaded thereafter grant of entry outwards is not obtained, then again the goods should be unloaded. That's the reason why first they will obtain grant of entry outwards and then they will load the goods. Okay. Then they will be filing export manifest. When export manifest, in case of vessel, export manifest. In case of aircraft, the document name is departure manifest. In case of vehicle, it is export report. And they will be filing passenger name record information. At the time of import also they need to submit. So export also they need to submit along with the manifest passenger name record information. And they will obtain permission to leave India from the customs officer. Okay. So these are the compliances to be followed by person in charge here. Then what are the compliances to be followed by the exporter? So an exporter shall submit shipping bill in case of vessel or aircraft, and in case of vehicle, bill of export. Okay. And they need to pay the customs duty if the goods are chargeable to customs duty. And when they need to pay customs duty, immediately upon filing shipping bill. And they don't have deferred payment facility. The deferred payment facility is available only to importer. And shall obtain let export order. So these are the compliances to be followed by exporter. Then we have transit versus transshipment. What is this? So these points already we discussed. I gave you an example if you remember. Transit versus transshipment. So first the goods will come to Gujarat port, thereafter to Chennai port, along with examples we discussed. Hope you remember. So a vessel will first come to Gujarat port, some goods will be unloaded, and the same vessel will be coming to a port in Chennai. So that is known as goods in transit. And for goods in transit, the same vessel which is bringing the goods to the first port will carry to the subsequent port. Whereas transshipment means, so first a vessel will bring some goods to first port, and from that vessel goods will be unloaded into different vessel, and the different vessel will be bringing the goods to another port. Okay. So this is known as transshipment. So transit means continuing transport of goods in the same conveyance. Whereas transshipment means, so in any other conveyance. Transshipment means continuing transport of goods in any other conveyance. That is known as transshipment. Okay. Then bill or declaration. See, in case of transit, no bill or declaration is required, because the same vessel which has brought the goods to the first port is taking to the subsequent port. So no need of any special bill or declaration. Whereas in case of transshipment, it requires filing of a bill of transshipment or a declaration of transshipment. And continuity in the records and control. In case of transit, so already record made in the ship or arrival manifest continues. So therefore in the first port, they need to show what are the goods which are for unloading in the subsequent port also. Okay. Whereas the continuity of records are not maintained. So therefore a different import manifest needs to be submitted in case of transshipment. So in the first port or airport, IM or AM contains the details of normal cargo as well as transit cargo. Here also transshipment cargo, but we need to file in the subsequent port a new import manifest or arrival manifest. The same import manifest or arrival manifest which we filed at the first port or airport cannot be filed in the subsequent port or airport in case of transshipment because the vehicle changes, that's why. Okay. So that is about transit versus transshipment. Then import or export by post. Import or export by post is equally applicable for import or export by courier. Okay. Import or export by post is equally applicable for import or export by courier. What is that? Suppose if goods are being imported, normally we know what is taken as the relevant date for determination of rate of duty. So what is the date of presentation of bill of entry or grant of entry inwards, whichever is later, or date of presentation of bill of entry or arrival, whichever is later, like that. But that is not applicable in case of import or export by post or courier. So in case of post or courier, so we need to take a different way. First, if the import takes place through vessel, post or courier through vessel mode, then the date on which postal authorities submit the postal list or courier agency submit the parcel list to the officer, or date of arrival of the vessel, whichever is later. See, same procedure is applicable for courier agency. Only thing is postal authority is replaced with courier agency. That's it. Okay. So first what will happen? The postal authorities will submit the list containing what are the articles which are imported to the proper officer. So that date or the date of arrival, whichever is later, will be taken. Okay. In case of aircraft and vehicle, the date on which postal authorities submit the parcel list to the proper officer, the date of arrival is not there. Okay. So here, if it is courier agency submit the parcel list to the proper officer. That's the difference. So that date should be taken as the relevant date. Then in case of exports by post, the day when a person handovers the parcel to the postmaster. So the day when the person say I want to export something by post, so the day on which I hand over the parcel to the postmaster, whatever is the rate of duty applicable on that goods, that will be relevant. Okay. Goods imported or exported through courier are treated on par with goods imported or exported by post. Understood? So this can be tested in exam in MCQ. Be careful. So they will give date on which it is handed over one rate and date of arrival one date. So one rate. So they will ask which rate is relevant in the options. Okay. So for MCQ it will be useful. Then this is a amendment that we have, section 51A and 51B. Electronic cash ledger and electronic duty credit ledger. Like how we have electronic cash ledger and electronic credit ledger under GST, the same way we have electronic cash ledger and electronic duty credit ledger under customs. So what is the purpose of electronic cash ledger? The same purpose for which we have the electronic cash ledger under GST. So what happened? Many importers were finding it difficult in order to make the payment of customs duty every time when the import takes place. So for that reason, they brought in this concept of electronic cash ledger. That is, whenever you wanted to make payment of customs duty, ensure that you deposit the sufficient balance in the electronic cash ledger at the time of filing bill of entry itself. So now whatever duty that has been there, if that much balance is there in the duty credit ledger and cash ledger, it gets debited. So you don't have to make the payment separately. Got it? So at different points of time we can make deposit into the electronic cash ledger, and whenever you deposit, that payment will be credited to this ledger, and using that balance we can make payment of customs duty, interest, penalty, etc. And whatever unutilized balance in the electronic cash ledger, you can claim as refund. Whereas electronic duty credit ledger is to minimize the cash outflow for the government they have brought, because previously all refunds under customs or incentives under FTP they used to give in cash, but now what they are telling is that so duty drawback is one incentive, then SCIS under FTP is one incentive, then any refund on account of export, so all these amounts will now be given into the electronic duty credit ledger. They will not give it as a refund into your bank account. So this money which is there in the electronic duty credit ledger can be used for payment of your customs duty, only customs duty, but cannot be used for payment of interest and penalty. Same logic. So there also electronic credit ledger balance cannot be used for payment of penalty, interest, fee, etc. Here also the same. So refund payable upon export or incentives under FTP are credited to this ledger. Balance in this ledger can be used only for payment of customs duty. Unutilized balance cannot be claimed as refund. Okay. Clear here? Understood? So this is about electronic cash ledger and credit ledger. So this can be asked as a short note questions. Then faceless assessment under customs. A small paragraph has been given. So we don't have the detailed information related to faceless assessment, like how you have faceless assessment in income tax. So like that faceless assessment is being brought under customs also. So sooner or later, it will be made applicable fully. So right now they just started. So in exams, so this much information only will come maybe for May 22 exam. So full information might be given, but this much only for November 21 exam. What is that? That is, generally we will be filing bill of entry. When we file the bill of entry, previously it was going to the jurisdictional customs officer, and the jurisdictional customs officer will process the bill of entry. But now situation has changed. Whenever a person, importer, files a bill of entry, so that bill of entry through ICE gate, then it will be forwarded to the RMS, risk management system. Now what RMS will do is that they will allocate the bill of entry, that risk management system will allocate the bill of entry to the customs officer who is located at different places. So he may not be your jurisdictional customs officer, he may be in Delhi, you are in Chennai, we file a bill of entry for import of goods into Chennai port. So now that bill may be verified by a customs officer in Delhi. You understood or not? To eliminate the corruption and bribes, so they have brought this. And this bill, when it goes to the customs officer in Delhi, he will verify the correctness of this bill of entry. If everything is perfect, so he will give customs compliance verification. Thereafter, automatically out of customs charge order will be received by the importer. Suppose if there is any discrepancy in the bill of entry, the officer will reject the bill of entry by specifying the error code. What is the error code? So they have given different error codes. So now you need to see which error code it will come into, and accordingly you need to rectify the bill of entry and again file a fresh bill of entry. Okay. So that is this faceless assessment. Okay. Then import of goods at concessional rate of duty rules 2021. Previously it was there and they have amended it. Import of goods at concessional rate of duty rules was there even before 2016 it was there, and 2009 also it was there, and they have amended it for 16 and now they updated 2021. What is this about? That is, let's take an example so that you will get a clarity related to this. There is a person who wanted to make some COVID medicine, COVID vaccine. Okay. So there is a pharmaceutical industry in India. So that pharmaceutical industry in India wanted to make COVID vaccine, and they want to import some chemicals for the purpose of manufacture of this COVID vaccine. They want to import some goods for the purpose of manufacture of COVID vaccine. and import of that goods is exempted. Generally those goods are chargeable to customs duty, but as these goods are imported for manufacture of COVID vaccine, that imported goods are exempted from payment of customs duty. Okay. Now, how he need to claim the exemption? So first, so we are discussing the eligibility, to whom it is applicable. A manufacturer or service provider is eligible for an exemption notification. Understood? For import of goods without payment of customs duty or for payment at concessional rate. Whatever example I gave you is manufacturer. Second, say for those who are into education related operations, online coaching or online education, edutech companies, they can import the equipments for conducting online classes. They can import the equipments for conducting online classes like cameras, digital boards, touchscreen devices, etc., which are again exempt from payment of customs duty. Okay. So service providers can import goods without payment of customs duty, or a manufacturer can import goods without payment of customs duty, or can import goods at concessional rate of duty. Okay. Then such imported goods to be used in manufacture of notified goods or rendering notified services other than for providing after sale service. So that should not be used for providing after sale service. Sir, what are the notified goods and notified services? That will be given by the government from time to time exemption. Just now I gave you an example now. But these goods should not be used for providing after sale service other than for providing after sale service. Okay. Now, such manufacture can be done by the importer or get it done on job work basis. What is that? So, COVID vaccine, some goods are imported. Either the one who imports it can manufacture or can get it manufactured on job work basis, either wholly or partly. Okay. So previously this was not there. Only the one who imports only should manufacture, but now they can send it on job work basis also. However, with respect to few goods, the job work is not allowed. That is, gold, jewelry, precious stones and metals have been excluded from job work basis. Means those goods is not possible in case of job work, which means all goods except these can be sent on a job work basis. Okay. So this is about the applicability of these rules. So to whom it is applicable is what we have discussed. Now, what is the procedure to be followed? Say that importer of goods at concessional rate or exempted goods is located in Coimbatore. The importer is located in Coimbatore, Tamil Nadu. Now, to his jurisdictional ACDC as well as ACDC of Customs Chennai Port. So, he need to first submit information to his jurisdictional ACDC, that is Coimbatore ACDC, that they are eligible, they are making vaccine, COVID vaccine, so they can import goods without payment of customs duty. So they need to intimate to the ACDC of Customs and 2 copies of that information along with a bond that if these goods are not used for the specified purpose, then we agree to pay the customs duty. Like that, a bond needs to be executed with Coimbatore ACDC. Now that Coimbatore ACDC will forward 1 copy of the information to Chennai ACDC where the goods are to be imported. Now that Chennai ACDC, whenever the goods are imported, will allow to the importer without payment of customs duty. So point number 3, import and clearance without payment of customs duty or at concessional rate. Now that importer, once he receives that goods within 2 working days, once he receives the goods within 2 working days, should intimate to the Chennai ACDC that the goods are received. Okay, so these are the 4 points that the importer should follow. Apart from that, whatever is the unutilized goods, or defective goods, imported goods, they did not pay customs duty na. Out of that, they have not utilized some goods, or there are some defective goods. That unutilized goods or defective goods can be exported without payment of customs duty, or can be sold in India along with payment of customs duty along with interest. Now, why interest is payable? At the time of import, they did not pay customs duty. Why they did not pay customs duty? They were exempted from payment of customs duty at the time of import. So now they are selling it in India, so they need to pay interest. Got it? Now they are selling in India, so they need to pay customs duty with interest. So interest computed from when? Had they imported and paid customs duty at that time itself, they should have paid immediately upon filing bill of entry. So from the first date after the date till the date they are making the payment of customs duty, they need to pay interest. At what rate? 15% per annum. Okay. So therefore, in this rules, import of goods at concessional rate of duty, so on this an interest computation may be tested in exam. Okay. Then suppose if you don't want to use it, you export it back, but you cannot keep it. So what is the time limit within which this should be done? 6 months. This should be done within 6 months. Okay. So say this. What is the information to be submitted? Some FAQs in this regard. What is the information to be submitted? Name and address of the importer and his job worker, if any. Goods produced or process undertaken. Nature and description of imported goods used above. Nature of output service. So what are the goods that they wanted to import, and what is the process that they will undertake, and what is the description of the imported goods which are used, or services, what services they are rendering, that details they need to submit. What is the period for which the goods can be sent for job work? 6 months. 6 months from the date of issuance of challan. Which challan? Delivery challan. Can capital goods be imported under these rules? Yes. Not only material, even capital goods can also be imported. Okay. And that capital goods can be cleared after usage. Okay. After that, goods can be cleared in the domestic market on payment of duty along with applicable interest on the depreciated value. Okay. See, again I am repeating. So not only material, even capital goods can also be imported under these rules. But those capital goods after usage can be cleared, either exported back or can be cleared upon payment of applicable customs duty with interest. But this customs duty with interest is on the depreciated value. How to compute the depreciation? So for every quarter or part thereof in the first year, 4%. For every quarter or part thereof in the second year and third year, 3%. Fourth and fifth year, 2.5%, and thereafter 2%. Say we used it for 4 years and then cleared. So 4 years. First year fully we have used. So 16. Then second year and third year 3%. So therefore 4 plus 4, that is 8 quarters. 8 3s are 24. Okay. Fourth year 2.5. So 4 quarters into 2.5, 10. 50%. So for 4 years if we are using, 50% is gone. Remaining is taken as the depreciated value. On that customs duty is payable. Okay. Clear here? Then when the unutilized or defective goods should be exported or sold in India, it should be sold in India or exported without payment of customs duty within 6 months. See, other than capital goods, capital goods no time limit, but the goods, normal goods, okay, this 6 months from the date of import, this is not for capital goods, not applicable for capital goods. So for capital goods, it can be sold in India thereafter also, and they have to pay customs duty on the depreciated value along with interest. And what are the compliances to be followed by this importer? They need to file a quarterly return by 10th of the month following every quarter. Okay. So these are the FAQs in this regard. So mainly on interest computation or this capital goods depreciation computation, they may frame a question on this. Okay. So with this, we completed procedures under customs, and all the topics under customs is over. Okay.